Hello and welcome everyone to the weekly Delphian meeting. Thank you for attending. So today we'll do our usual market update, and then Shawn's going to provide an update on how the earnings are going so far this quarter. So that's all we had planned. Obviously, we'll answer questions if people have those too. So let's get started. Okay, so overall, as far as the market, all the indices are still in state one. We'll do an individual analysis of those. Just kind of big picture market pulse. Obviously, we've gone up quite a bit. So last week, I think we were right over that threshold of 45. I think we were 46, and now we're even higher, 52, 53 almost in state one, so very high, elevated. And the state eights have dropped, a little bit. I think they were around 20 last week. So green pie has gotten bigger, obviously very high at this point, was 70% are in bullish states. So let's take a look at the market pulse. So so we can see, last week we were right around here, 48%. So it's gone up higher. Overall, obviously a good sign, obviously, that the state eights there. The state eights from last week have declined 22 to, we're right around 18. Obviously a big spike in the state ones. So, that's obviously telling us things are bullish if this continues. Obviously nothing on the new lows here. The past week has been a pretty strong market overall. As far as bullish, bearish, so overall, since we've had that crossover about a month ago, it's been almost pretty much straight up. We're getting pretty elevated here, in the 70s range. So that's just, a little warning, we're kind of getting even, we had, for state ones, 45% is kind of our, initial, overbought. So we're well above that. And then this is getting pretty high too, as far as just, bullish states in general. So these are definitely getting elevated. Obviously, they got up around, the state ones got up around 70 at one point, but I don't think we'll see that anytime soon again. But obviously very frothy right now as far as, the market pulse. Let's look at SPX. So, I think that crossover was, the 15th, so it's gone pretty much straight up. So that's a good thing as far as state modeling did its job really well. Normally we have some kind of resistance here, and then it comes back up like that. But this one obviously just went straight up. So right now we're at the key level, target 3, where we normally run into the strongest resistance. We've pretty much hit, I think, that average move. Obviously, quite a few days left since it went pretty much straight to there. But this level's where we usually run into very strong resistance. So, the typical pattern is run up into 1, 2, kind of resistance, bounce off support, run up here, and then fail, by this time. So that's typical pattern. So this isn't exactly like that, but we are at basically where we run into pretty strong resistance. Target 3. It's this very time to be cautious when we get up around this level. Now, if it can close, if it can pop above there and turn that into support over a few days, then it can continue to run. That's what we found. So this is going to be your key level right now. You know, can it get above there or not? The same thing for Russell. So this is kind of unusual as of lately, but this one's mirroring the other indices. So that's overall a bullish sign, you know, for the market, that, you know, the Russell and, you know, S&P are pretty much matching. You know, the Russell been maybe a little stronger just recently. But you can see here, you know, we're already at T3, whereas SPX was right below it. So this was already showing right here, you know, strong resistance, which we expect at that target 3. You know, so we have our typical move, kind of go down, test support, run up, and then, you know, fail. That's the average, you know, base case. So that's kind of what we plan for normally. So right now, this one's, you know, you have a really clear resistance level that is pretty close to that target 3. So that's what we need to watch. You know, it's already shown that, you know, it's got strong resistance with that move there. You know, it came right back down. I think it's still down below there today a little bit. So this is, you know, this is the typical turning point for these state ones, but, you know, not always. So you have to be careful. But, you know, this is that kind of key level for the Russell there. So let's look at the S&P chart. So our 50 days, you know, even though we had that little dip, you know, we had one back there previously too. You know, this kind of same type of thing. So we still have the 50-day, we're well above that. So, you know, that would be, you know, good support level there, 44.84. Let me go back to SPX. Let's see where that is on the state modeling chart. It's the entry price pretty much. So, you know, the 50-day, that's 44.84 is the 50-day, and that's your entry price. So obviously critical support right here, and then, you know, critical support, I mean resistance up here. So that's what we need to watch for. See if we can, you know, break through the, you know, for the Russell and for the S&P, you know, can we break above those? So, you know, that, you know, I'd just say in general, when you're looking at it, the market pulse is definitely overheated. You know, both of these major indices that we track are pretty much right near that target 3 level. So that's just showing, you know, a lot of resistance. I think it'll be very tough to break through it this time. But, you know, that's kind of my near-term outlook, is that, you know, we're going to have a real tough time getting above there. You know, last week we had the Fed meeting as a non-event. You know, they weren't even looking at inflation. So, you know, but, you know, today the CPI came out and it's like the highest since like 1990 or something. So obviously inflation is not transitory, like they said. We knew that. So, you know, that's, I mean, the end of this party is going to be when they raise the rates. So if you look back like in 08, 07, you know, they pumped up the rates, then crashed. And then, you know, back in 2018, you know, they did the same type of thing where they just pumped the rates up and then the market has crashed. So I would just, you know, longer term, you know, when the rate increases start coming, that's when to be extremely careful. That'll be the kind of signal when they start, you know, raising them, that, you know, the party's over for a while. So just my thoughts on that. I'll open up to questions or comments.
Hey Josh, it's Lee.
Like,
hey, when we're at this point where it could go either way or it's bumping this resistance, do you ever look at the VIX and compare, contrast that to, say, the SPX to get an idea that it may go lower or it may go higher?
I mean, the VIX is hard to call, that, I glance at it just for, like on a daily basis, like, kind of where it's at, up or down or whatnot. But I don't use it for the charting, as far as like the modeling. But there's usually a floor, where it gets, I think previously it was 12. But it seems like 15-ish is the recent kind of floor. So, like this one, obviously it's state 8 and it's not really, it's kind of that 1563. You can see that's pretty strong support so far. Pre-COVID, I think we were down around 12. For kind of like the low end. But we talked about how that stayed above 20 forever, and then finally, kind of came down. But I don't, I mean, if anything, you can look at, when these things spike. I mean, they're usually good turnaround targets. Like, okay, VIX has hit state 1. Like, it doesn't do that often. It's usually a good contrarian signal for the most part, unless there's some like fundamental issue in the economy. So,
Right.
Yeah. It's, I keep an eye on it, but, not as closely as the other indices.
Right. Okay, thank you.
Mm-hmm.
Yeah, this is Dave. I was going to make a comment on the VIX too. It's up a little today, like you said. It's about 18. You said in the picture there, it was up a little higher earlier, just when the CPI and PPI came out, which were, like you said, they were higher than expected, and they were expected to be high. So that's kind of like a double high kind of thing, in my opinion. And so as to kind of responding to Lee there, as all the good news, by the way, I think is now out, that we finally got the infrastructure bill out of the House. I don't know whether it got signed yet or not, but so, there's the buy the rumor, sell the news kind of thing. The Russell did pop there, like you were showing. I think in response to that, now it's like, well, now the news is out, so now what, right? So that's kind of the question, is now what? If all the good news is out, and now we're sort of going to focus on, what could the bad news be? There's probably some concern. I would, will things go up or down? Who knows? Or will they, consolidate for a while? Who knows? But I think those are some things to be concerned about. And the fact that the VIX is up after all the good news is out might be, kind of supporting the just be careful kind of perspective there. Just saying. So I was glad to see the infrastructure. Finally, we got some stimulation in jobs, money flowing. So it will be interesting to see how long it takes for that money to actually flow, and for new companies to start hiring, and for new companies to come into being to support all the policy hopeful things. We'll see. Usually doesn't turn on a dime. So it'll be an interesting quarter, just saying. But I kind of do watch the VIX, especially if VIX is moving and nothing is happening. To me, that's more of a signal to, like, well, wonder what's going on. If the VIX is moving up and there's no real news for it to move up, something, that's when I'm more concerned about, watching the VIX. So if the market is down big, of course the VIX is going to be up in reaction. That's the cause and effect thing, not the projecting into the future kind of thing. So anyway, that's my Dave's commentary. I hope if you're, bored with my commentary, you go get coffee when I speak up at this time. But I usually do say something about the news, because I think it has had an impact on things, and now that's passed. So good luck on all of our decisions going forward from here.
Hey,
Yeah,
can I jump back in, please?
sure.
Dave, see, I took all of that inflation news as being bad news. You know, it was the worst inflation in 30 years. And really, the VIX just didn't move very much, is what I thought. Now, I don't know that that means anything or doesn't, but I was expecting more of a move. So
Well,
just to follow on to your statement.
yeah, well, think of what the VIX is, though. What is the VIX? The VIX is the
Fear, Dave?
change in volatility, the actual change in volatility of both calls and puts, based upon both calls and puts. So it's really not a forecasting as much as a lagging indicator of just what was compared to what was a while ago or some time before that. So yeah, the markets haven't moved all that much, right? What is the VIX of 16? I think is a 1% move every third day. So there's a rule like that. I'll look it up next time and I'll bring it. I'm pretty sure that's the rule of 16s. 1%. If the VIX is at 16, that tells you that expect maybe a 1% move every third day. If the VIX is 32, it's like a 2% move every third day. So the fact that the VIX is at wherever it is now, 18-ish, it's up from 16 a little bit, but that's a kind of a 1% move-ish in every third day. So it's like nobody's wildly upset or euphoric about kind of that move so far. But if we have a 2 or 3% down day 2 days in a row, watch the VIX be up near 20 again. Just so that's my, sorry if that, I don't know if that's helpful or not, Lee, but that's
It is. Thank you, Dave.
Sorry.
Thank you.
Yeah, and it's based off the S&P 500, the puts and calls, in case you didn't know. Okay, thanks, Dave. Anyone else?
Dan here. I'd like to make a comment if I could.
Shoot, Dan.
Yeah, I was looking at the CPI today, and it was over 9% for the month, 0.9, and which extrapolates out to about 11%. If you multiply that times 12 months, and which is a pretty scary number.
Right.
And we're asking the question, why is that not reflected as much in the VIX? And I think the issue is with this inflation going on, that's just eating away at anybody that's holding cash. Right now, cash is trash. So I think people are really being forced to stay into the stock market, okay? Because I think that's where they're seeing the value is. And I think they're praying that the market doesn't tank, and which is kind of scary, especially at these lofty levels.
Right.
But I think there might be a lot of people that are just praying that it can make it until the first of the year, so that maybe they can get out, because they don't want, if they cash out now, a lot of people don't want to pay the taxes. If they can put it off until next year, they'll put it off till next year. So I don't know. But it's like a catch-22 right now. It's like you're damned if you do, if you're damned if you don't. And people that are jumping into the market right now, it's actually you're supposed to buy low and sell high, and people are buying at the top still. They're buying a dip.
Yeah. I think you bring up a good point. I mean, there's nowhere, where else can you put your money to work? CDs are trash, bonds are trash, like you're losing, real money, in terms of inflation. You got a nice 3%, bond coupon, like you're losing, like you're losing money on your principal, and like whatever, interest payments you're getting, it's just worthless.
Yeah. And real estate, but
yeah, that's a good one. I mean, real assets.
Yeah, real assets. And real estate, people think that, oh, look at my house, just went up 50%, but it's not that the house went up 50%. The value of the dollar has gone down.
That's right.
It just costs more for that house. That's all.
That's right. So that's probably the best place to hide your money.
Yeah.
or, and just that, yeah.
This is Dave again. This is a little sort of a slight change in topic, but I don't know, maybe it fits in here with regard to like housing and inflation prices, right? Where are we feeling it the most about inflation is probably, I'm guessing, house prices and cost of food and cost of gasoline. And I don't know whether people notice this or not, but there's now a question or push back to should the government actually ban crude oil exports. And I know from talking to some other forums and whatever, that there's a lot of people that say the government should just stay out of business. You know, what do they have to do being in business in the first place? Well, you know, thinking about that, and this is sort of in line with the past discussion that we had here on stock buybacks. Is it going to be a good idea or a bad idea? You know, they're going to be taxed now, maybe. Well, yeah, stock buybacks were illegal at one time until the government made them legal. We did have a ban on oil exports from 1975 to 2015. So what's that, 25, 35, 40 years? And so the oil exports were disallowed. Now, if the government decides, oh, we're going to ban exports for the sake of supporting and servicing U.S. citizens before, you know, the citizens in China, who's buying up all the oil that we export now for the most part, right? You know, that, you know, we would just be going back to what used to be if that came into being. But there'll be a lot of people saying the government just stay out of business. But fact is, policy changes affect us as investors all the time. There's not much we can do about it besides cast our vote for a different set of investor representatives next time around, right? But we have to deal with those policy changes. So I bring that up right now because if gasoline is one of the real highest issues on the inflation side, and we were to ban the exports of oil, that would likely bring down the cost of gasoline at the expense of people that are putting new money to work in the oil and gas industry, because prices have just gone up and they'd probably be chasing high prices and buybacks that might be greatly affected if policy got changed all of a sudden. So, you know, I bring that up right now because it has an impact on inflation. The key inflators to inflation, gasoline prices for the most part, and what the government does. And, you know, I think it's important to sort of follow, at least be aware of things that the government, that policy changes may enact. I mean, it had a great impact on me when they, personally, when they did sign whatever infrastructure bill was in there, because some of the stuff that was in there helped out some of my positions. But so that's what we do as investors. We look ahead at what might be good in the future, what trends might be good in the future, and that's where we go long in, right? And personally, I don't know that policy decisions are, if they're good for us as the kind of investing that we do with active investors, right? We follow trends more than, you know, maybe value investors, or maybe we do both. But we can take advantage of with platforms like Delphian and option strategies. We can take advantage of those near-term turnarounds, and you know, what's liable to be ahead in the next 2 or 3 years compared to what was just behind us in the last year and a half. So I think everything that Delphian does to help us get our heads around that, and you know, I'm going to stick with this as long as we have our little group here. So thanks for all you're doing to help us out in that. Just wanted to say to the Delphian guys, thanks.
Yeah, thanks, Dave. I appreciate it. You know, we are trying to, you know, help you guys as much as we can, you know, as well as, you know, our own trading too. So, so thank you, Dave. Appreciate the comments. Anyone else before we get Shawn going here? All right. Well, thank you all. And next up is Mr. Shawn Glover.
Hey, how's it going? All right, yeah, I'll share my screen. Let me get it up real quick. So a couple things that I wanted to go over. I'm still, here, I'll share my screen. All right, so I'm still in the midst of updating, all of my virtual portfolios, but I did see kind of one, big theme when I'm actually in there updating all those virtual portfolios, and I have a couple of them that are completed. So I'm still just trying to add some in there from when I was out and just verifying some of those dates and things like that. But I did mention, break even analysis a couple of weeks back, and we didn't have time to speak about it last week. So, this might be, kind of basic for some, but I think it's a good kind of review for others possibly. And I wanted to show an example using, one of the trades that we do typically for our bullish pre-runners, our earnings trades. So, we had Apple come out as a bullish pre-runner on the 1st of October. So the 1st of October would have been the date to put this Apple trade on. And, as everybody knows, we, had in the past used those long calls for our bullish pre-runners, and we switched it over to the bull spread now. So I just want to kind of run the analysis on those two and show you, what I look at and kind of how I do it within the platform. And, then that can kind of bring in that break-even analysis like we mentioned before. And obviously, if anybody has any thoughts or comments, while I'm showing this or talking, feel free to jump in. We've got these calls interactive over the past couple of weeks, and I think it's great for us to be sharing these ideas and talking back and forth things, because something that I use for one reason somebody else might not use, or they might use it for another reason, and that's that's all great. So if I go back in the time machine to October 1st, and then I go into my pre-alerts, I'm going to go into my earnings and my pre-alerts. Actually, it was on maybe the day before. Let me see. All right, so here, so on 9/30, so for trade date, 10/1, we can see our earnings pre-alerts had come out. So for Apple, we're looking at a confirmed date at that time. Bullish pre-runner, it gives us the actual trade. It obviously gives us the current stock price of Apple on that particular day, 140.43, and we're actually going to be selling the 140 put and then buying the 125 put for protection. And so we're basically selling the option just one strike below the current market price. So what I'm going to do is typically it's going to pull up here with that information so I can enter it in. I'm not sure why it's not doing there where I could actually hit the trade. Let me go back one day and see. Sometimes I don't understand that. All right, well, I'll put this trade in. So what I wanted to do was put the Apple trade in as it is here, and then put the Apple trade in as the long call, most likely as close to as we would have done it last quarter. And then we can look at the difference between the two from there. So here, again, I'm doing the Apple December 17th. I'm selling the 140, 125 put spread 7. I'm just writing these numbers down real quick. $7 is here on the put that I'm selling, and then 264 on the put that I'm buying. For these earnings trades, while I'm putting this information in, does anyone actually use the virtual portfolio to track these trades, the earnings or the studies as Josh does them?
I do a little bit.
Nobody?
This is Dave. I do a little bit, yeah.
Okay, so you use the virtual portfolio, or do you use like some other system to do it?
Kind of both, if you will.
Okay.
Both is the answer.
No, fair enough. That's fair.
Yeah, I do the bull puts and the bull calls. They all come out pretty good.
To track them or trade them or both?
I trade some, but I do all the I do them all in the virtual portfolio.
In the virtual. Okay, cool. Yeah, I mean, the reason I ask is because, yeah, I really like the virtual portfolio. I know, when we're talking to, other customers or potential customers, I mean, this is a key aspect of what I like using that kind of helps me analyze stuff that I've done in the past and hopefully help me find maybe, changes that I can make in my trading to make it better potentially, or even different trades to see how the trades are working. And, as we've talked before, Joe isn't on the call now, but Joe is is big into using the Greeks for the options. I haven't used those as much in the past, but this is a great tool for me to look at those numbers, the Greeks associated with the options that I'm trading, and try to put that into perspective and be able to see, how the delta is moving on the option, and how does that affect, my option price versus, how much the stock price is moving. So kind of putting those numbers that we're talking about onto, for the lack of a better word, paper, and be able to follow it day to day and see how those changes are happening. And then hopefully I'll be able to apply that to future trades as I'm moving forward in time or making future analysis. So I set this one up a while ago on 11/2 when I was going to show previously. I set up this Apple break-even analysis, this portfolio. I just went in, add new. I added all the parameters here to set it up. I'm going to hit cancel. If I go into the Apple break-even analysis, it should be open. So there's nothing in here. I had some in there that I deleted them. So you can always do that. You can always add them in there, delete them, go back in time, trade them, things like that. So on October 1st, for the Apple bullish pre-runner, if I want to add a position, I'm just going to click add a position. I'm going to type in Apple. Like I said, that link typically is there to where I can actually click on it and do it automatically, but for some reason it wasn't pulled up. So bull put, I leave my risk per trade blank. I don't really use that myself. Apple, we're going to be doing the 12/17 expiration. I'm going to sell the 140 put, and I'm going to buy the 125 put for protection. On this trade, it was $7 and 264. So I'm going to put 7 here, 264 here. And then before I do any other analysis, this actually does show me pretty much the majority of critical information that I want to know when I'm putting these trades on. So it gives me my max profit, which since I'm selling this spread, as we know, my max profit is going to be the credit that I receive. So that's going to be the credit that I'm receiving on the trade. My max risk is the difference between the strike prices of the spread and then the credit that I receive. So the difference between the strike prices is $15, and then the credit I receive is $436. So 1,500 minus 436 gives me my max risk of $1,064. So essentially it tells me the most money I can make on the trade, the risk that I have on the trade, and then most importantly here is our break even. So it does show me my break even price as 135.64. So the break even price is essentially just taking in my credit, so the credit that I receive on the trade, and then if the stock goes down, that's when I'm losing money on this trade. So I get a credit of 436, and as the stock goes down is when I'm going to start losing money. But at break even, as long as the stock is above at expiration, as long as the stock is above 135.64, I'm going to break even or at least make a little, or at least break even. I might make a little money depending on how high the stock price is at expiration above 135.64. So you really just take your credit in a trade like this and minus your credit from the strike that you sold, the 140, and that's where you're going to get your break-even price. So, to visualize, I'm going to show it on a chart as well. But really, when I'm looking at a trade like this bull put trade, we've talked about it. The stock price can really go in, essentially 3 directions, 3 out of 4 directions, and there's really only one direction where I'm really going to lose money on this trade, and that's if the stock price goes down and down in a decent way, right? If the stock price goes up, if the stock price gradually goes up, or if the stock price goes sideways, in theory, I should be making money on this trade, at expiration, as long as it stays above that 135.64. I'm going to leave the profit targets and the stop loss targets blank for now, because this is just really going to show you guys in the virtual portfolio. But if I hit create, this is going to create that trade in the virtual portfolio for me, and then I can track it, throughout time. So it shows it as a profit already. Because if we look at it, the previous day's close versus the next day's close, there's an added value. I had to change those strike prices based on what happened. Or, this was put out, at 10 a.m. In the morning to put the trade on. So, at 10 a.m. the prices were a little bit different based on what they were versus on the close. So we can see that's why we're showing a little bit of a added value there already by the time the stock closed. Any questions on setting that trade up in the virtual portfolio?
Not a question, but a comment is that,
Yeah.
and back to the, you asked the question, do I use this or that? I don't do every one that comes out in a virtual portfolio, but the ones that I actually trade, I make sure I do. And I just wanted to say that this is an extremely valuable tool, both of these things, the time machine and the virtual portfolio, for evaluating strategy. Should I have used the long, the bull put, or should I have the long call? And this is like those together are the most excellent way to get confident in which way you go. Because you can track as long day by day as you're going. You can't do that anywhere else on any other platform. So kudos to you guys. But that's where I find the benefit here is like, okay, if I there's another reason is like a lot of times I use long calendars to set up for an earnings situation ahead of time, with the idea of trying to have a long call in play that I got cheaper by the time you get to the days of when it's time to put on a pre-runner, for example. And I use the virtual portfolio to say, okay, and sometimes I do both in real money too, just because then I actually see the outcome in dollars and cents as to which strategy worked out better that time, right? But it's great to analyze on, day by day. You can watch, well, what's the implied volatility doing as the position is moving along, and how is each different strategy being affected accordingly. It's a great tool for those. If you the other guys aren't doing that, I suggest maybe you think about doing that, because it really will help you in your confidence about picking strategies. Just saying.
Right.
And you guys have something nobody else has. So again, thanks for having us being able to participate with you.
No, yeah, we appreciate it. No, Ashoka did a great job. Ashok did a great job putting this virtual portfolio together, because even, we're reviewing these systems with other members and other people within the company. And there's some spots like this compare positions that we have here. And even when you're doing different analysis, you can compare, positions or multiple positions within, your portfolios or in that portfolio. And there's just a lot of really cool things that, I don't even use really on a normal basis, but that's in here. You just got to kind of mess around with it. So, and then to your point, Dave, I find it good too, to where if I'm testing a strategy out, let's say I want to buy, Tesla, but, obviously I want to go long Tesla. And so if Tesla goes down, that's a problem. So then what I can do is I can put that strategy in here and then find an environment to where not Tesla, but maybe a different stock went down in price in a big way. And then I can analyze my strategy on that stock and say, okay, well, if this stock's going down, how does this really affect the strategy that I'm looking to employ on Tesla? Obviously, the option prices and things are a little bit different, but it tells me how is my strategy going to react in a big down move. And then if I don't like how that strategy is reacting with that big move down, then that might not be my strategy that I want to employ on Tesla or some other stock that I'm expecting to go up. So just because you're looking to trade it on Tesla, and if Tesla doesn't have a big move down, you can still apply that same theory on another stock that is moving down in a big way and kind of get fairly similar results to see how that strategy would react and how you would react, emotionally as well to that type of movement in your valuation. So,
Hey, Shawn,
so cool. So yeah,
it'd be nice to see the break even in one of the columns.
yes, totally agree. And that's one of the things that we're trying to implement with these new changes is having, that break-even analysis here somewhere, or even, we have this secret, I don't want to call it secret, but this link here, if you click on bull put, it opens up that new window. And this is one thing that I showed the group when we were going over it with them, was this window I thought showed my break-even, but it doesn't. So I really would like for my break-even to be displayed on this page somewhere as well, at least, right? Preferably on that front page, you could see your break-evens price here, next to maybe your current prices, so you would know where your break-even points were, but at least to see it on this page too, where I'm showing that actual trade analysis. But yeah, that's one of the things we're trying to get that group to implement for us. So definitely, and that's something we're working towards there.
Okay, thank you.
Yeah,
No worries.
Shawn, one other comment that I have, because I use the virtual portfolio kind of like on a spot basis, but I use it a lot for the reasons I just mentioned. One thing that I kind of is, I find it challenging for me is how to name my virtual portfolios, because almost every time I'm evaluating strategies, and I have to have that in the name somewhere, and then it's every time you do a little tweak, it's like, how do I keep track of which
Right.
portfolios were which ones really? So I don't know if there's some way you could help us track the name of what we have to give our portfolios to,
Sure.
what's inside it. I don't know how you do that, but I'm just saying.
Yes.
I end up having to like delete them more often, just so that the next one I'm not confused by what I did last time, if you know what I mean.
Yeah,
Yeah.
I do. Yeah,
Okay.
it's tough. I mean, Josh might have a good example of how he does it. I'm in the same boat with you, Dave. I try to do them based on strategy. I'll try to do them based on like my bullish pre-runner, but then I'll have a bullish pre-runner that uses a long call, and then I'll have a bullish pre-runner that uses our no bull put strategy. So then I have two separate portfolios tracking the same bullish pre-runner, but they're just different strategies. And then and then I tried to do it based on the strategy. So if it's a long call, I'm just using a long call portfolio, but then I have multiple strategies or multiple entry exit dates within that one virtual portfolio. So yeah, it's going to be, I think, what really works best for you, because I kind of in the same boat. Josh, do you have a way that you do it better that you can think of, or is that just kind of the nature of the flexibility of this virtual portfolio?
Excuse me. Yeah, so I do all the studies, and I do like each individual strategy for the study. So like a bull put. So currently for every single study, I have a bull put, the old one that I'm still, that still have a few trades that are closing out, the new bull put, and then the bull call. So, that's how I just describe them all. It's just, there's three for every single one.
Right.
I mean, you can create unlimited numbers. So it's really just kind of, it's the same thing with back testing. You just have to figure out a naming convention, that works for you. Because everyone's going to be a little different, but, don't be afraid to just, you can keep, you can have 100 in there. It doesn't matter, So, don't be afraid to just like overdo it. And then, you'll eventually hopefully figure out, a good naming convention.
Yeah, it's not a matter of keeping them, Josh. It's a matter of remembering why and how you put them together. For example, the three things that we're talking about here are the name of the virtual portfolio, the strategy that was behind, why it got created, and the rules that you used. Right? It's the rules that you tweak a lot. That it's like, okay, I need to, if you could tie those somehow together, or be able to quickly link back to, okay, here's the name of the portfolio, and for this trade, here were the rules I used. Like, I don't know how you do that, but you follow what I'm saying? It's the rules that sort of affect the strategy. It depends whether if I'm making us, if my standard is to use one strike below and to, some other strike for the other strike, and I then move to one strike above as my standard, then that's pretty easy to reflect in the name that you choose for the virtual portfolio. But if you're experimenting around with 2 or 3 different ones, to find out which one might work better, then you run into problems quick. And it's like, well, so if I can't remember exactly why I named this portfolio the way I did back then it's kind of useless to me, and it's better for me just to delete it and start over with my next experiment, so to speak.
Well, I just call it, your test portfolio, where you're putting multiple trades in to see them side by side. So like if Shawn wanted to do, like the long call versus the bull put, like he'd go in on, 10-1 and put in the long call, then he can compare them, side by side, as you click through the days. So maybe just have, for, the ones you do normally, you can name those. And then if experimenting, just say
Yeah,
what.
that's pretty much what I do. That's pretty much exactly what I do for that experiment. And when that experiment's done, I kind of like clean slate. I kind of like, empty cache and delete the previous results so that they don't, because I can't remember them all. I do a lot of trades. So, it's like, okay, it's like remembering exactly the specific rules or the ideas behind any individual trade is my challenge because of the way I trade, and I cause my own problems, put it that way.
Well, when you add a new trade in there, you can put in the notes on the bottom, that description. Scroll down, Shawn.
Right. Yeah, I'm going to show you add a position. So if you add a position here, I'm gonna do the Apple again too, so I'll show you guys. But I thought it would already show me that, right? Why is it?
This may help a lot.
Down below here.
Yeah, so you can type in there. That's what Sudhir really wanted, that stuff down there. So, we had it for admin, but we released it for all you guys, and I think you can edit it now in the actual other page. So.
You might be able to, yeah.
Okay, I'll check that out. Yeah, that might help a lot if I just realize to use it. Thanks. I'll look into that. Thanks, Josh.
Yep.
How would you see it in the portfolio?
I'll add it in here. Yeah, I'll show you real quick. So this, let me see. Let's just see. There. We'll put versus. So real quick though, everyone, this is basically what would essentially be the long call that we would put in, for the bullish pre-runner for Apple. The price is going to be a little bit different. We can see this is on the day that the trade would have come out that morning at 10 a.m. So we can see the stock went up, from 141.90 on the open to 142.65 on the close. So I'm buying this, 150 call for the same expiration. It's a 35 delta. So I'm buying the 150 call. I'm paying a little bit more than you would have probably paid if you bought the option at 10, a.m. in the morning, but I just want to show you this as an example. And we can see, again, just like the other one, $365 is what we're paying for the trade. We can see our break even is going to be above 153.65. So for a long call, your break even at expiration is essentially just the debit that you're paying for your trade, and then your option has to be that much in the money for you to basically, break even and then start making a profit. And again, we're talking about at expiration, so on December 17th, that's where the stock price has to be for this option to make money. But we all know as time goes by and as the stock price is creeping higher from 142, up to 153, we should be making money on this trade. For every dollar that the stock is moving up, we should be making 35 cents on the option. So, that's how you can relate that delta. So even though it's, basically what I mean is it doesn't have to be above 153 for us to make a profit on this option. It just has to be above 153.65 at expiration, which is in December. So, all right, I'm going to go ahead.
Should do 3 contracts because the other one was like 1,000, right?
1,000. Okay, I can do that. Yeah, I can do that. That's cool.
All
right, so it's just bumping me up. Same break even, but it's just my debit's increasing because I'm doing 3 lots instead of 1. So let me hit create. So I put the notes down below. You can also add an attachment if you wanted to do that. But let me hit create. And then, so now my strategy is sitting right there with us as well. If you click on the long call, which is going to be my long call, it's going to show me my analysis for the long call. This is where we would have that information kind of, hidden down below, if you will. It could be a little bit bigger than that, but yeah, I think you can edit it if you wanted to edit. Can we edit it like that?
I haven't tried it recently.
I haven't either, so don't. Okay.
Maybe it doesn't work.
Doesn't do anything. But if you did have notes there, that it's kind of hidden there from that previous page. I think what Dave is mentioning, or at least what I would gather from it, is if I could somehow, we don't want to make these, we don't want to have more columns here, but maybe we can tighten some of these up a little bit. But if I could make a description and say, you know, this long call, I'm using a 30 delta, maybe another long call, I'm using a 50 delta to buy it or something, you know, 50 delta strike is basically my strike selection model. Something so I can note, like Dave said, this bull put I'm using, you know, selling one strike below the current price, maybe another bull put I want to use, you know, sell one strike above, but something like that could differentiate the two, and I could quickly see what's one strategy versus the other.
Yeah, just the link right there under that. If you click that, and it would bring up the exact rule that I would type in as a description, that would be
Right.
perfect.
Yeah. Yeah.
And-
I mean, we have it there, but like,
Yeah,
you said,
right. I see that. I see that now. I probably just didn't scroll down to my
well,
stupidity.
yeah. I mean, it's pretty small. It's small too. So if we can make it bigger and maybe reposition it somewhere where it's more, you know, prevalent above the chart, because once you hit the chart, you're like, okay, that's it, cool, the chart, and then you kind of move on. So have it here or maybe at the top. So yeah, that's part of the analysis of what we're doing. We're making some of these changes. So so cool. So yeah, I wanted to just show you guys that obviously with these two trades, we can see there's a big difference in the break-even prices, right? The break-even prices at expiration. There's also a decent disparity between the deltas, right? So we're looking at the long call shows a delta of 105. Reason is again, because we're doing a 3 lot, it was right around 30, 35, I think is what it was, or, you know, somewhere around that range. 24.79 is the delta on the bull put. Now, Dave or Josh or anybody that wants to jump in and correct me on this if I'm wrong. So as the stock price moves higher, I'm making, you know, as Apple goes up $1, I'm making $1.05 on, you know, this position as a whole. As Apple goes up $1 on the bull put, I'm making 24.79. But on the contrary, as Apple drops $1 in price, I'm losing those amounts. So we can see that, you know, as the stock price drops on Apple, I'm losing, you know, more than I'm losing, you know, I'm losing more on the long call than I am on the bull put spread, you know, and obviously as it's going up as well. But as time goes by, if the stock's not moving higher, you know, I would assume that my long call is going to deplete in value a little bit faster because of time decay. So we know that we have to have the price stay above a certain range on the bull put spread, but really at expiration and then on the long call, we know that it needs to be above a certain range to make money. So two different scenarios I'm going to show you on the chart, and kind of so we can maybe visualize that a little bit better as well. Any questions on setting those up in the virtual? You know, like we said, pretty great tool. I mean, I use it, you know, a lot as well. If I go a couple days forward, we can see the difference in prices. I think 142 is where I entered. 139 is the current close on that, or the current close on that day. And then we can see the shift in value. You know, obviously 228 to the negative on the long call, but I only lost 43 bucks on my bull put spread. So a decent difference, you know, in the way the value shift. Now, I think the bull put spread was actually up $50, you know, because of the settlement prices. So actually down about 90 from where it was the previous day. But I lost 228 on one and I lost 90 on the other. Oh, I don't know what I just did there. Disregard that. I haven't seen that before. Is that what I did? No, that's not what I did. I don't even know what I clicked on. So yeah, if I keep going forward in time, oh, this went all the way up. This went all the way up to 11.9. Let me see. I was on 10.1, excuse me. I was on 10.4. So if I go one more day ahead, now we can see the stock went from 139 to 141. So we can see we've gained some value now. So now we've gained a bit of value on our bull put, which we're profitable on, but on our long call, we're still, you know, we're still down a little bit of money on our long. Sorry about that. We're down a little bit of money on our long call. So let me show you the analysis on the chart real quick. If I go duplicate, I go to a chart. What I want to show here is I had this set up like I mentioned last time, but then it deleted it. So I want to try to recreate it real quick. So if I type in Apple, and then again, this is on 10.5. So just a couple days, you know, after when we initiated that trade, let's go forward, you know, a couple weeks or so. So on 10.18. And so we're looking at the chart of Apple. So if I look real quick, we can see that, remember our long calls, our break even was around, our break evens on the long calls were around 153, let's say. So I put the trade on 10-1. So this is about where my break even would be for my long call. We can add notes in here. You can say add notes. So I can do something like, see, break even long. Type in link, sorry, long call. Hit save. I thought that was going to put that on there. Sorry. I can do the text and do that. But I could do text and then I could adjust it. Even, no, sorry. You can see I use this all the time. Oh my goodness. Sorry, guys. Break even. Long call, save, okay. So our break even on our long call, and I can actually move that, is around 153. Now our break even on our bull put spread, remember I sold the 140 put and I collected about 400 bucks for it. So let's just say 135 is our break even on our bull put spread. So we're talking about a break even, roughly around this range here. So, so if we look at this, you can see that pretty quickly. You can see my break even for my long call is here, and my break even for my bull put spread is here. You can really see the difference between the two. I really need the stock to make a big move, to the upside for me to make money on my long call. But really, as long as if the stock moves sideways through time or moves up or moves really up, I should be making money on my bull put. So you can really see the difference, I think, visually, where you're really making money on these two trades, at expiration. At expiration is, again, I use that because that's a huge disparity between, today's environment or expiration for the options. But when you're defining that and you're having to come up with those specific values of, where your break even is, you have to use that expiration as that endpoint. So, I thought this shows really good visualization of, your trade, your long call here, your bull put there, and kind of where the two can react with the actual stock price. So any questions on, kind of the chart, how to set the chart up, or any functionality on here? Nobody? Hopefully I'm doing an okay job. So yeah, so one thing I wanted to show you too real quick is what I clicked on when I was over here is, when you're in their virtual portfolios, and something that we had seen the other day for that analysis is, if I'm in if I have all of my portfolios as a whole here, I have a bunch, I have 50, almost 50, 49. If I do symbol analysis here, and then like Dave said, if you have multiple portfolios with a similar position, you can run your position status on just your open positions, and you can select all of your portfolios. And let's say I want to look at just Apple. It's going to show me all of my open positions that I have in Apple throughout all of my virtual portfolios. So here it shows me just all my different metrics based on my Apple positions. It shows all of my open Apple positions here. And then it also shows me, my chart based on my expiration, my Apple positions with my expiration. So some of these numbers here are bunched up based on, the strikes that they're using, for the different trades. But, it's a really interesting tool, if you do have just a couple positions open to where you can run some quick analysis. If I wanted to look at, all of my open positions in my, where's that one break-even trade? So my break-even portfolio that I just had, we'll be able to see it here. So these are just the two positions that I have on within that break-even analysis portfolio, and we can kind of see those positions running together, throughout time. How much risk is there? How much, risk I have on the particular trades and things like that. So pretty cool little tool there that, again, it's kind of hidden, but we're working on to make it more useful for everyone. So just wanted to show you guys that. But any questions on, break even or, the virtual portfolios or anything within the platform? Nobody? And then, I know we're running up to 2 o'clock, but, like I mentioned, on some of these earnings trades that we have going on right now, a quick summation without kind of running into the details, it definitely seems like, obviously, with the recent run up like we've had in in the market over the past, couple weeks, maybe since the middle of October. A lot of these, bullish runners and bullish pre-runner trades are working pretty well. As Dave and some other people had mentioned before, with supply issues and inflation and just different things going on in the market, and then earnings kind of, the unexpected earnings, a lot of the, vol crush or the non-movers have really been taking some decent hits because they have been moving, to a big way outside of these ranges. So, but some of the bullish trades seem to be working well, obviously, because the market's been going up. But anybody want to share their, trades, what they've been doing with the earnings plan? Any good, bad, ugly between those? Anything?
Yeah, sure. This is Sudhir.
Hey, Sudhir.
Hey, I am currently at 41 and 7,
Okay.
and a profit factor of 1.44.
1.44. And part of those, what, 6 trades or so are probably are they from those butterfly type spreads, the vol crush or the non-mover section?
Say again, I'm sorry.
Are some of those losers from that vol crush or non-mover section?
Yeah, I think recently the big ones that lost were Microsoft and Coke.
Uh-huh.
So those were, I can't remember which one. They were either the vol crush or the non-mover, one of each. And
Right.
those stocks moved quite a bit. But
They did,
overall, it's still profitable. 41 and 7 is, what is that? 85.4%. So,
Right.
and had, for example, the OLED trade, which isn't one of those butterflies, but it closed for a profit today.
Mm-hmm. Good.
I'm
I think I had that.
curious.
Was that oh, go ahead.
Yeah, I'm just curious, on the bold puts, how easy were you to be able to get out of them?
Get out of them?
Yeah, to sell them. Close the position.
Well, the bull puts, I set a sell at 25% and they just execute.
And were you able to sell it when you put it out there? Or did you have to just keep on waiting and waiting?
Yeah, I'm not sure of your question.
I know
I put a target immediately when I create the trade, then I put a target order that is good till cancel. Right?
Yeah, maybe Dan is asking about average days in trade. Do you have data on that, Sudhir?
Oh, average days in trade? No, I don't have. I mean, I can calculate it, but I don't have that handy. But I can tell you that in general, in a bullish pre-runner, you're supposed to close it regardless the day of earnings. And in a bullish runner, you close it a certain day after earnings, right? And
Right.
I've only manually closed maybe 2 or 3 trades. In other words, they hit their 25% target on their own, and they never reached that time limit. Does that make sense?
Mhm.
Mm-hmm.
Yeah, it makes sense to me. I thought that's what Dan was asking, so that does make sense to me. So that's good.
Yes. Yeah, I'm not sure that answered your question, but they just, I set the limit order out there and good till cancel, and they just close. And then I have a calendar, a reminder of when I'm supposed to close them if that limit order never executes. For example, today I'm supposed to close Disney, which is a vol rise. It's sitting profitable right now. I'm giving it to the end of the day. It's making money, but it hasn't hit the 25%. So if it doesn't, half an hour before market closes, I'll close it out. And, I think it's sitting at like 15% profit. So, because earnings are coming out.
Right. Yeah, and I haven't had a problem either with mine. So I do a lot of the bull puts in my other account as well, and then my Trader account too. And I do, like Sudhir mentions, I'll put the order in to get into the trade, sell it for a certain credit. And then once I'm in the trade, once I'm in the trade, I just do the opposite, right? I put the order in as a spread. I put it in at that 25% profit of my credit that I received, GTC, and then I just kind of look away, and sometimes I go in there, it's still in there because the order is working, and sometimes it's gone, because it was filled, excuse me. Yeah, I don't think there's too much of a problem getting filled if you have those GTC working, I mean, it's just an order that's there outstanding for as long as the trade can go on until, like Sudhir mentioned, until the day before the earnings announcement, or, if it's a runner, then you have to get out, let's just say it's 10 trading days after the earnings announcement, and then you just get out. So I haven't had a problem doing that. Now, obviously, like with all these trades, we want to make sure we're looking at the, the open interest or the volume on the options, because some of them slip in there for whatever reason they're coming in. I had one in there that I put in there as in my virtual portfolio as a vol crush, and then I went back and there was like 3 weeks in time. So I was like, well, there's not supposed to be any stocks that have, only monthly options on there, but then that one did for some reason. So sometimes, they come into that list for some reason, and it's unexpected. So just make sure we're always paying attention to that. And if, the open interest, the volume looks low, that might just be a trade to pass on, because again, might be easy to get in. It just might be really hard to get out. And that's the worst thing, is to see a trade, or see a profit, but not be able to take it because the open interest or volume's low.
Yeah, in a response to I don't know, that wasn't Dan. Who was the question?
It was Russ.
Oh, Russ. Oh,
Russ,
sorry,
yeah.
Russ.
I mean, I've had problems in the past, I do a bull put and then I can't get out of it.
Yeah. Well, okay. I would suspect that the ones that are harder to get out are the if you don't get out automatically are going to be the long calls, but because I think it all depends on the width of the strikes and how close to expiration you are, because on the spreads, or on the vertical spreads, you have the same expiration. So there's if implied volatility hasn't changed that much, and if it wasn't low when you put the trade on, that it'll be harder to get out. If it was low when you put the trade on and it's moved up somewhat, that'll mean it'd be easier to get out, because you're and it's probably a long explanation with deltas and implied volatilities, but
what specific issue are you having getting out of the trade? What do you see?
Can't close it. I mean, it's like close to the expiration, and it's completely out of the money, but yet, I can't get out.
And you're using a market order or limit order?
Limit order.
And what is your, what platform are you using?
I was using Tradier.
Oh, okay. I would talk to the platform. I would talk to Tradier.
Yeah, I've done that, and they says, well, you just have to play with your closing price.
Yeah, so like let's say you put in a limit order, you want to close it, just as an example, for $1, and it's not you're trying to sell it, so and you move it to like 95 cents, or 90 cents, it should close, right? I mean, if the natural market is sitting at $1, I mean, unless you're trying to sell it for $1.30, yeah, that's never going to close if the market is at $1 for the spread.
Right.
But if you're somewhat close to the market, let's say 95 cents, it should close, right? And so unless you're asking for something that's really larger, far away from the market price of that spread, sometimes I have, I don't have to do this with GTC orders, but if I'm closing it manually, and I try and enter the order, and it says, okay, the price is $1, and I enter it and it's not closing, and then I'll go back and cancel, replace, and set it at 95, and it closes, right? But it shouldn't take much more than that. to close if you're
Yeah.
near the market.
And it also
Yeah.
it also can depend upon what the market is doing that day when you're trying to close. If it's moving against you as you're trying to close, it's going to be a lot harder, right? And you'll be chasing a lot. You'll be moving down, and you'll see the price moving down, and then you'll move down some more, and then you get stuck in that problem that you're having there, Russ. So make sure you're trying to close when at least the market's moving in your direction sometime during the day.
Yeah, but the times where the market is moving so fast that it does occur, like Dave is saying, but the times where the market is moving really fast and that market price is changing on a spread, remember it's a spread, not a call. It's changing on a spread really fast that you can't get it to close. Those are not common days. You know, on most days with a spread, you know, the pricing is fairly, you know, moving slowly because you have, you know, you're buying one side and selling the other side, so they kind of balance it out, right? And so that overall spread price is moving rather slowly.
Yeah, and I think what was mentioned too is coming up to expiration. You know, if you're in the week of expiration, you're still trying to get out, and the options are, you know, out of the money or deep in the money. You know, it could be a problem. I mean, it could be hard because you just might not have people that are that interested in those strikes, you know, coming into expiration for those options. You know, a lot of these are the bullish runners here, but for a lot of these closed positions in the bullish runners, I mean, you can see that the expiration on most of these is in January, and I'm getting out of these trades in, you know, November. So you still have, you know, almost a month and a half or so, 2 months on these trades, and you're getting out. But, you know, I would almost assume that if I'm getting into January and I'm still in some of these positions, it's going to be hard to get out just because, you know, depending on how far these options are away from the market, the interest in those options just might be kind of low. There's just nobody on that side that want to take that side of the market because they know those options are expiring pretty soon. But these
Yeah,
still have a lot of time on these.
And that problem is exacerbated when the width of the strikes is relatively small compared to the price of the, you know, the selling price of the stock.
Right, definitely.
That'll be even a bigger problem if you have thin widths compared to like a really high price stock. Then it's like, yeah, it's a digital trade almost at that time, and the market makers are going to hold through to expiration because the price can swing into and out of your spread easily. And so, yeah, it's hard to trade out of.
Yeah,
And
when
if
I
they're far-
have
if they're-
like
okay,
that,
Go ahead.
when I have problems like that, I always go and look at the option chain, and then I see typically there's not any or little open interest, and that's maybe because I didn't get in the trade the right way, but that's when I have trouble.
Yeah. Yeah, if they move far away from the stock price, you know, and it's coming up to expiration and they're a bit far from the stock price, I think you'll see a substantial difference in the open interest for those options. You know, not in a stock maybe like Apple or Facebook, but in some of these other ones like, you know, JCI or maybe Waste Management, or, you know, you might see a decent disparity there just depending on how much those options are traded.
Yeah, but if it's a bull put spread and the stock has moved far from the short strike, right? In other words, the stock has gone up, and you've got a good to cancel order out there for 25% profit. That thing should execute.
Oh, definitely. Yeah, definitely.
It should execute and gotten you out. So, I mean, I forgot the gentleman's name who was talking, but you know, that's a unique situation that maybe needs to be looked into with the trade here, because I haven't seen an extensive number of problems getting out like that. I haven't heard that before. I don't experience that on Thinkorswim.
Yeah, I don't experience it often, and kind of like what you said too. If I see that it looks like it should be covering me at $1 and it's not, you know, and my order's been in there GTC for a couple of weeks, I might go in there and just play with that, you know, dollar order, just, you know, a penny or two, one way or the other, just to say, hey, just to kind of push it back in their face and say, hey, look, I have this order here. Is this valid or not? And then they might fill it or they might not. And then I'm like, okay, well, maybe I'm just getting a bad quote or something. But yeah, if it's moving in your favor, you should be getting out of it. So I'll have to look at that.
Okay,
All right.
thank you.
Well, that's all I had. I'll say again. Oh, I'm sorry.
I'm just saying thank you on that.
So yeah, that's all I had, guys. So I mean, I appreciate it again. The discussion back and forth is really good. So keep it up. And then that's kind of all I wanted to show you guys. I'm hoping to have these things done this week for the virtual portfolio. It should be all up to date. I like Sahir has his noted on his calendar when the days are coming up. I went into the spreadsheets that we have saved on the shared file and I typed in those formulas that you guys shared with me previously, and putting in there when the data need to get out of the trade post earnings or pre-earnings, when do I have to get into the trade pre-earnings, just to make sure it all lines up. So just making sure all my dates and everything are lining up for the virtual portfolio before I share it. But hopefully I should have something good for you guys next time. So that's all I had, Josh. Thank you guys for listening.
Yeah, thanks, Shawn, and thank you everyone for contributions, and we'll do it again next week. So thank you all.
Thank you.
Thank you.
Good meeting.
Thanks, guys.